All right, so this is the guided assignment for chapter 22. And what we're doing is a cash budget for this Mercury Shoes company for the next 3 months. So for June, July, and August. And so it gives us their sales, their manufacturing costs, their selling and administrative expenses, and their capital expenditures for those next 3 months. And then it gives us, I believe the technical term is a butt ton of other information. Like, man, if you hate word problems, this is the wrong class, right? Like it's just tons of info. So it tells us the company expects to sell about 10% of its merchandise for cash. What that means is they'll collect 10% of those sales figures in cash during that month, but the other 90% they're going to collect in future months. Okay. Which is pretty normal in a lot, especially for wholesalers, right? They give people time to pay. So it says of the sales on account, 60% are expected to be collected in the month following the sale, and the remainder of the following month or the second month after the sale. Then it gets into all the costs, and we're going to sort of hold up and just focus on right now the cash receipts. Okay, so down here you'll see this sort of outline for the cash budget. And so our estimated cash receipts are going to come from both cash sales, so money we collect at the point of sale, right? And from a collection of accounts receivable. So I'm actually going to use Excel, if you hadn't guessed, to go through this process so we can figure out how much of the cash we're collecting in a given month. And so if you're really comfortable with Excel, it'll be great. If not, it might slow you up a little, right? Because I'm putting in formulas and stuff like that. The reason I'm going to use Excel is because there's a fair amount of math. You could do it with a calculator, but Excel will do a lot of the heavy lifting for us. And I like when other people do my heavy lifting. Yeah, it's nice. All right. So here's what I'm going to do. I'm going to start with saying, what were the total sales? Whoops, I'm going to put that down one line. And I'm going to actually start all the way back at April, because we'll be collecting some of the April sales in June, right? We only need to make this budget for June, July, and August, but the fact that we'll be collecting some of that cash in June means we need to be aware of what sales were in April. So this is how I'm going to set my problem up here. Thing is I don't know my total sales in April or May. All I know is that, so if I come down here, it tells me about my balance sheet. It tells me as of June 1st, my current assets included cash, marketable securities, and accounts receivable of 198,000, 150,000 from May sales, and 148,000 from April sales, and that my sales on account in April and May were 120,000 and 150,000 respectively. So I don't know my total sales from those 2 months. I don't really need them, and so that'll come into play in a minute. So I do know my total sales for June, July, and August because they're given to me right here. So I'm just pulling those straight off of this little chart: 160,000, 185,000, and 200,000. And since I'm working in dollars, I'm going to go ahead and tell Excel, let's call that dollars, and we don't need the cents. All right, so there's my total sales. So to figure out my cash sales, all I have to do is, I know that it says we expect to sell 10% of our merchandise for cash. Tells us that here. So I'm going to say my cash sales equal 0.1 or 10% times my total sales for that month. And if I know my total sales and my cash sales, then I can figure out my sales on account, which would just be my total sales minus my cash sales. And for April and May, my sales on account were actually given to me right here. Sales on account in April and May were 120,000 and 150,000 respectively. Well, that was nice of you, Cengage. Thanks, buddy. Thanks for giving me that info. Everybody good with where we're at, or should I hold up a second? Like, I know using Excel sometimes will slow us down a little. So until you get good at it, then it will actually speed you up a little. Okay, so it's worth it to develop the skills if you feel weak in this area. You good to move ahead? Yes, yes. Okay. Speak now or forever. Not forever. I mean, we could still change, but all right. So there's our sales on account. So now we have to figure out collections. So the way I'm going to lay this out is I'm going to say our collections of our April sales so I know that of my April sales, sorry, of my April sales on account, right? In April, I would have collected 10% of my total sales in cash during April. But then of the sales on account, I'm going to collect 60% of those in May and 40% of those in June. Because it tells me right here, of the sales on account, 60% are expected to be collected the month following the sale, and the remainder the following month or the second month of that after that. I don't really need to worry about collections in May because my budget's just for July, August, and September. But I'm just going to say in June, then I'm collecting 40% of the April sales. For my May sales, I'm going to collect 60% of those in June and 40% of those in July. That makes sense? Yes, okay. For my June sales, I'm going to collect 60% of those in July and 40% of them in August. And then for my July sales, I'm going to collect 60% of those. Whoops, I need to do my equal sign, sorry, equals 0.6, 60% of those in August. And the other 40% will be in September, but I'm not going to worry about them because they're not part of this cash budget. Again, could you do this all by hand with a calculator? For sure, you could. I just think this actually makes our life a little easier once we get used to it. You good, Jana? Okay. So my total collections are just going to be the sum of those collections. So another way to look at this is to say in June, I plan to collect 48,000 from the April sales and 90,000 from the May sales. So a total of 138,000 of those collections of accounts receivable. In July, I expect to collect 60,000 from the May sales and 86,400 from the June sales. In August, I expect to collect 57,600 of the June sales and 99,900 of the July sales. There's my total collections. So I can come down here now, and here's my cash sales. So in June, my cash sales were 16,000. July, 18,500. In August, 20,000. Right, I figured those out up here. And then my collections on accounts receivable are the ones I figured out right here. So 138,000, 46,400. And then my total cash receipts are just going to equal my cash sales plus my total collections. I think I'll check my work at this point to make sure I'm not going dangerously off course. So I've got my total cash receipts for all 3 months. People still working on it, or I'm okay to go ahead? I know sometimes you guys work ahead too, so. All right. So now let's look at our cash payments. That was our cash receipts. We'll look at our cash payments. Again, let's come up here. We see we have manufacturing costs and selling administrative expenses, capital expenditures. We also have this information. Let's see, depreciation, insurance, and property tax expense represent 12,000 of the estimated monthly manufacturing costs. The annual insurance premium is paid in February and the annual property taxes are paid in November. And the remainder of the manufacturing costs, 80% are expected to be paid in the month in which they're incurred and the balance in the following month. So I'm going to start with my selling and administrative, or sorry, with my manufacturing costs. And those are given to me right here, 66,000, 82,000, 105,000. And then all of this information about the $12,000 worth of depreciation, insurance, and property tax. We know depreciation is a non-cash expense, right? This is for assets we purchased in the past, and we're just taking the expense spread out across the asset's life, so we're not paying any cash. And this is a cash budget. We're interested in cash. We also know that an insurance premium we paid in February, although it's being allocated, or we're using adjusting entries to claim the expense for a portion of it during June, July, and August. We know we're not actually paying any cash for that insurance in June, July, and August. And the same thing for the property taxes, which get paid in November, it said. So I'm going to say less non-cash costs. Which will give us our cash manufacturing costs. And then our instructions tell us of the remainder of the manufacturing costs, 80% are expected to be paid in the month in which they're incurred, and the balance the following month. So I'm just going to call it, I'm going to say, so our cash payments for May costs, June costs, July costs, and August costs. So we don't know what our total cash manufacturing costs were from May, but if we come in here, it's going to tell us that current liabilities as of June 1st include 13,000 of accounts payable incurred in May for manufacturing costs. So in June, we'll be paying that $13,000 of May costs. The other 80% of those May costs were paid in May, right? So this is the remainder of those May costs that we're going to pay in June. And then of our June costs, we're going to say this equals 80% of our June cash manufacturing costs are actually going to be paid in June. And the other 20% of the June cash manufacturing costs are going to be paid in July. And then 80% of the July cash manufacturing costs are going to be paid in July. And the remaining 20% will be paid in August. And then 80% of the August cash manufacturing costs will be paid in August, and the remaining 20% will be paid in September. Don't care about September because I'm doing this one. So this will be our total manufacturing cash payments. So our cash payments for manufacturing costs, 56,200 in June, 66,800 in July, 88,400 in August. We're also going to have cash payments for selling and administrative expenses. And those are actually just given to us. So those are just straight up. So I'm just going to put that here. Put them right here. The only reason I'm doing them in my Excel spreadsheet is because I'll have to do some math with them in a minute, and it just makes my life easier. And it was only a couple entries. And the other one is it tells us we have a capital expenditure. That means buying equipment or land or a building, something of 120,000 in August. And we have other cash expenditures. So again, we have to come up here and read this problem, and it tells us an estimated income tax payment of 24,000 we made in July. A regular quarterly dividend of 15,000 is expected to be declared in July and paid in August. So I think that's it. So I'm going to do income tax payment. In July. And dividend in August. All right, so now we're ready to do our total cash payment. Which is just going to be the sum of everything from our total manufacturing cash payments, selling and admin, and then anything else, right? Capital expenditure, income tax, dividend. The total cash payments are 96,200 for June, 136,800 for July, and 274,400. Woo, that's a lot in August, but we had that big capital expenditure that month. All right. So after we know our total cash payments, we can figure out our change, or our cash increase or decrease. Sometimes they call it change in cash. Actually, yeah, I think that's what they want from us right there. Actually, you know what it's going to want from us right there? I think it's going to want our cash from the beginning of the month. Is that what they want? Okay. Cash increase or decrease, which is really it's just our total cash receipts minus our total cash payments, right? So that's how much our cash went up, and then we see it went down in August, which shouldn't surprise us. So my cash increase was 57,800 in June, 28,100 in July, and negative 96,900 in August. And then here we're going to add the cash balance at the beginning of the month. Here's our problem though at this point, is we don't know. We know our cash balance at the beginning of this whole period which is 42,000. Current assets as of June 1st include 42,000. Okay, so at this point, we're going to have to start working through the end of the month. I'll show you what I mean. Cash balance. We know it was 42,000 at the beginning of at June 1st, because that's given to us here in the problem information. So my cash increase plus my cash balance at the beginning of the month is going to be my cash balance at the end of the month. Up here, it tells us that management desires to maintain a minimum cash balance of $40,000. So what we're going to do is we're going to subtract our minimum cash balance. And then that will give us an excess or deficiency of cash. Just going to put so at the end of June, I'm going to have $59,800 more cash than what my minimum required is. Does that make sense? I require 40,000, but I have 99,800. So then I'm going to take my cash balance here at the end of June, and I'm going to put that up here because it's also going to be my cash balance at the beginning of July. Your ending balance of 1 month or of one period is always the same as your beginning balance of the next period. So then same thing, my cash increase plus my cash beginning balance be my cash balance at the end of the month. My minimum cash balance is always 40,000 because them's the rules made by management. So our excess in this case is going to be 87,900. Same process. I'm going to take my cash balance at the end of July and make that be my beginning balance at the beginning of August. And my cash balance at the end of that month is going to be $31,000. My minimum cash balance is 40,000. Meaning I'll have a deficiency of 9,000 or 9,000 less than the minimum we want to have. Why? Because we made that big old capital purchase, right? We spent an extra 120 grand that month. Sometimes that happens. we're 92% done with this problem at this point. So we could just be like YOLO and not finish it. Or screw it, 8%, not worth my time. But it's easy. So the budget indicates that a minimum cash balance blank be maintained in August. So will not be maintained, right? In August, we're not meeting that minimum cash balance of 40,000. This situation can be corrected by blank and or by the blank of marketable securities. So we can either borrow money to make up that cash, or we can sell marketable securities. At the end of June and July, the cash balance will blank the minimum desired balance, and that's exceed. How easy, 100%, because you're smart. I hope that was helpful. So I'm actually going to